What is going on, everybody? Today we're going over FCEL Energy, ticker symbol FCEL. This is actually a trending stock. Today went up from 12 bucks to 14 plus dollars to start the day, 15% plus. We're gonna go over financial statement to see what's going on with FCEL, the symbol stock. We're gonna go over the analysts to see what they have to say, and we're gonna go over the insiders to see if they're buying or selling. This is a global leader in delivering clean, efficient, affordable fuel cell solution configured for the supply, recovery, and storage of energy. Everything right now about electric car, clean energy, all that stuff in the next upcoming years, now with the election results behind us, should get pushed up. Doesn't matter the stock, to be honest. It's I don't know if it's a bubble, just my opinion, but prices should go up. But we're gonna get a better picture of FCEL Energy. So with that being said, let's get started with FCEL. I'm in Yahoo Finance summary page. FCEL Energy, ticker symbol FCEL, supposed to start, went 10% up yesterday, another 15% almost to start the day. Again, all based on the election. This is the result is great for all the electric industry, electric vehicle, clean energy, everything green, everything better for the earth, all that stuff. All those stocks, Tesla, etc. Should benefit from that. Let's see what we got. We got a 52-week range. Look at these guys, from $1 to 14. We're at all-time high, or 52-week high. I assume it's all-time high. 1-year target was about 9 bucks. We're way past that. According to the analyst, the price is overvalued. We shall see. Earning per share is a negative 56 cents per share. That's not a good sign. You know, people are jumping in on stuff. I like to see the numbers and let the numbers tell me what I need to know. Market cap about $4 billion. You know, a couple of years ago this was a lot. Today 4 billion is, hey, why it's not 40 billion? Because it's like water. Let's move on and see what else we got. I'm in the analyst tab. There's not a lot to go around other than this. The next 5 years per annual, we got a 15% growth. Next year we got 58% growth. This year they're gonna grow by 70%. If you look here, only 4 people are covering. This is a small company, no matter the hype that you wanna say on Twitter and stock tweets. This is a very, very small company. Average price of the analyst is $8.75. The low is $1.50 and the high is $18.50, which we're not there yet. I assume we'll get there. The last update was here, January 7, actually today. Jeffries went to hold. Interesting. Initiated by Jeffries to hold. So it didn't say go buy at like 12, 13 bucks or 14. It said hold if you're already holding. If you are trying to buy, it said it's a good time to hold. That's basically what they're saying. They're not saying go buy at 14 bucks. Something to consider. Let's go over the financials. There's not a lot to go around, so I'm gonna try and get a better picture with the finance numbers. Let's see what they have to tell. See what we see in the finance statement. Income statement. I like to see total revenue growing, and you see from 2017 it went from 95 million to 89 million, down to 60 million, down, and the last 12 months up to 65 million. So we're down from 95 million to 65 million, 30 million down in revenue in the last 3 years. I assume there's a lot more competition. You think just because it says electric and everything is good, it's gonna pump to the moon. Okay, you can think that, but the numbers are telling me there's more competition, more people are getting into this industry, and thus the margins will go down. If you see here, the gross profit also went from 2.7 million positive to 3 million positive in 2018 to 2019 to negative 21 million to now negative 23 million. You know, you can listen to Twitter and stock tweets, you can do whatever that you want. Numbers tell me otherwise. That's not a good sign. And if you go here to the net income for the shareholders, again, you can see negative 57 million to negative 62 to negative 100 million to now negative 108 million. They're not profitable. They're losing money year after year. a lot more than they lost 3 years ago, probably because of competition. You can say, hey, they're expanding, they're adding more stuff. Sure, you can say that. I think it's pure competition, and the company can't lose money forever unless you're Amazon, but I don't think they are Amazon in this case, or Amazon of clean energy. Let's say. Let's see what else we got, but so far it doesn't look good from this. Not a lot to go around in the balance sheet because the last update was 2019, so I will probably do a follow-up in about a month or two once Yahoo Finance will update 2020 results. But let's see cash flow. We got operating cash flow, the money that they're making from the operation itself, the core business. Are they profitable? That's the most, not most, but I think one of the top two key numbers. It needs to be a positive, it needs to be up and up every single year, and we do have a negative 71 million 2017. Then they jump to a positive 16 million. That's good. All this hype started about 3-4 years ago, but then it went down 45 million to a negative 30 million, and the last 12 months you would be surprised. You thought they're making money, they're losing money. So they lost another $6 million from operation, meaning, I don't know, they sell something for $100 and it costs them to make it I don't know, $106. Times that by like 30 million bucks, something like that. It's not a good sign. Let's see what else we got. Issue of stock. Let's see what they have. They diluted their shareholders double than a year ago. Issue more stock. That's not good. They went from 40 million to 90 million. That's not a good sign. Issue of debt. Another not a good sign. They went from a $70 million issue of debt, taking a loan to pay for everything that they need to do in order to function and work and expand and actually do the operation, which they're losing money on, to over $102 million loan. Yes, they did pay probably this loan. They paid a $50 million loan, but that's extra $100 million on their balance sheet as loan, extra, and that's why they did $90 million issue of stock. If you think the insiders are not gonna sell their stock at 14 bucks, it was $1 like I don't know, 9 months ago, you're deluding yourself. You're listening to Twitter instead of following the numbers. Just my opinion, that I just see what I see. And they ended with a free cash flow of a negative 37 million, which is worse than 32 million a year ago, which is a lot worse than 2 years ago, which was $6 million plus. This is a very small company, and from what I see, the numbers don't add up at all. I'm in this website, guys, openinsider.com. FCEL, Fuel Cell Energy SEC Form 4 Inside Trading. We only have one result. Let's see what we got. October 20 on 2020, which was like 3 months ago. Mr. Christopher John Gruby, a director, type A grant. So he got free shares, you see, price 0. So he got that's great. I would like to get shares for 0. How many? 7,717 shares. Good for you. The value that you pay is $0. Wouldn't you like to get I don't know, 7,000 shares? Good for you, brother. But I don't see a selling. That's a good thing. In the last 2 years, nobody sold and nobody bought. It's not a new company. It's been around for like 30 years, but it's a small company. That's the key. Small company, more competition. Finance doesn't look good at all. I need to see the results of 2020, but so far it doesn't look good. Would you buy the price of 14 bucks, or would you rather buy the price of $1, which was a couple of months ago? I'm not buying at 14, just my opinion. If I bring you guys any sort of value, click the subscribe button, hit the bell notification, leave a comment below which stock would you like me to do next. I hope this was informative. I don't like the financials. I'm not going to follow Twitter or stock tweets. I'm following the numbers. Numbers don't lie, guys. People do. Remember that. And I will see you in the next video. Thank you very much. Yeah.